Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some ETF related news and charts today. Haven't done one of these in over a month now. A little bonus Saturday video. Give me a like, dislike, comment, share, subscribe, all the good stuff. So potentially next week, Monday, we've got more ETFs coming online via Hong Kong, both Bitcoin and Ethereum. This is relevant because if we see Asia flows, China flows into a Bitcoin ETF vehicle, one, it just represents more money into the ecosystem, but could also represent a significant amount of additional AUM for Bitcoin. And unfortunately, if it does too good of a job, China will just close it like they've done with the gold ETFs. China's housing market is crumbling. China's markets in general are crumbling. So one way to sort of obfuscate capital controls potentially would be something like this, which is another reason why the Chinese government would potentially cap investments or close investments altogether. But at the end of the day, the more products and flows, the better. Now, obviously, we have this breaking news today and last week with Iran attacking Israel, and that represents additional escalation in the Middle East, more geopolitical problems, potentially escalation of war. So we are seeing significant risk off right now in Bitcoin for the weekend futures market, which is Bitcoin. Nothing else is open right now, not gold, not oil, not S&P, just Bitcoin. So what we've typically seen in these periods is selling off of things you can sell off, right? For anyone who didn't risk off sufficiently on Friday and has Bitcoin in a portfolio, they are potentially likely to take some risk off the table where they can, right? So you definitely can't ignore that headline. We also have a bunch of 13F filings coming through, which are RIAs, asset firms, wealth management people showing Bitcoin ETF ownership. Macroscope is a great account to follow. He shouts those out. There's been a couple in the past week, one in Philly, one in South Carolina, another one in South Carolina, IBIT, BitB. There's been a bunch. So there will be a bunch more. This is a link on the SEC's site where you can follow along as they come through. But we should continue to see these throughout May, and we may see more of these later on rather than earlier if these firms are trying to sort of hide that they own Bitcoin, at least for the time being. As far as the flows into the tax season for the United States, flows have been muted in general. Price has been kind of flat. Flows clearly driving price in February and early March, and now in April, seeing virtually no flows essentially on a net basis. It makes sense that price has gone basically nowhere until this geopolitical news. If we look at the weekly flows, then we continue to see decline over the past 3 weeks. So it's no surprise again that price has gone nowhere. The question is always the chicken or the egg problem, right? Are the flows going to push this higher or lower? What moves first? Does price move first, or does price move because of the flows? Clearly, they are entwined. The ETF flows aren't the entire market, but they are a significant portion of the market. What we may see even next week is additional outflows from multiple ETFs as a potential thing to watch for on the back of, again, this risk-off move. IBIT, I believe, is in the running for the most consecutive inflow days of any ETF ever. I think they're in like the top 20. So they've had quite a run so far. And you also have to keep in mind at this point, not everybody can access this stuff. Even in the United States, it's being turned on. It's being activated in the wirehouses and the Morgan Stanleys and the whoever else's of the world. Due diligence is being done. Adding this to portfolios is being talked about in meetings among portfolio allocators. So all this is very early days still. So it's very encouraging to see the inflows that we've seen so far. But just because we have an ETF doesn't mean price can't go down, right? That's important to remember. Halving, of course, in 5 days. And as is generally true fashion, we find a reason to sell off in and around halving. The difference this time maybe being that we had quite a move leading up into halving, so we have more to give back on a mean reversion basis. But the previous two halving drawdowns were not really anything anybody could have predicted. COVID, obviously, and then the one before that was a Bitfinex hack with a significant amount of Bitcoin being hacked from that exchange. Good news for the network is that the network keeps running regardless of what's going on in the world, and issuance and emission will decline by half, as you can see here in the look into Bitcoin chart. You can see the various price points and block rewards in BTC terms for each epoch here, and this will once again decrease by half going forward. We still have miners hoarding significant amounts of BTC, and I know why they're doing it. I just certainly would wish that they didn't run a hedge fund on the side. I don't know of oil producers or other commodity producers who necessarily have an in-house hedge fund where they're using Bitcoin in their treasury. The main problem is that they're sort of leveraging their leverage in that they are extremely tied to the network in a sense, and then are also using Bitcoin in their treasury. And we can see over the past 3 years, Marathon growing significantly, CleanSpark's treasury in BTC terms growing significantly. I'm on record many times saying I don't like whales because, again, in stressful periods, you see additional drawdown for whatever reason. So it's always best if this gets distributed, but it is what it is. And we can track this over time and we can watch this. And I would definitely be careful trading miners in and around halving, especially if Bitcoin price continues to sort of fall off the table and these miners are holding the amount of Bitcoin that they are, right? Looking at price relative to halving periods, we're certainly ahead of schedule based on the percentage move we've had. So again, we have several percentages to give back here on the downside, should we so choose to do so. And most of the action comes many weeks after halving, if anything, 2 to 4 months after halving. So we could see an entire quarter of more angry activity, chop activity. I'll talk about the chart in a second, but we had the opportunity to reach for 80. That is looking fleeting, at least in the moment. Much like the ETF stuff, we had people claiming victory on buy the rumor, sell the news. If people claim victory on buy the rumor, sell the news of halving, it's not really a rumor. It's just, it happens. It's math again. But I can see people who are buying into halving, selling up here for whatever reason, right? And then taking time to reassess price action over the next month, 2 months, quarter, whatever it is, right? There's no rush to hurry up and go again, at least not based on technicals. For the DCA warriors, for the paycheck DCAers, this is what you want, right? If you've got money or you're earning USD and you're looking to invest, you want prices lower. You don't want prices higher, right? One sanity check for whether or not to continue to DCA or not is looking at the 20-week moving average. This may be hard to see on the video, but in a bull market period, we live above the 20-week moving average. We hardly ever, if ever, break below the 20-week moving average in a true bull or bear trend. So we can look historically, how overbought or oversold have we been from that 20-week moving average, assign it a value, and then determine whether or not we want to, DCA accordingly. If we look at all of history for Bitcoin, the average on the multiple is around 1.22. Currently, we're around 1.17. The 20-week moving average is somewhere around 52.5. And you can see around the halving dates, we have eventually mean reverted, at least the past 2 halving dates, into the 20-week moving average. So none of this is out of the question. None of this is out of the ordinary. For many people, the issue is when we get there, if we get there, that they continue to do nothing and not pull the trigger, right? They get greedy in a different way and want deeper retracement. Another way to look at this is the histogram. And again, we are in the 1.19, 1.2, somewhere in here. So if we look at all of history, this is generally where we like to live. Now, it's a different story if the multiple is 2+. If the multiple is at 6, then maybe don't DCA that week. Maybe give it a couple weeks, let the moving averages catch up or price move down to the moving averages. But down here, I wouldn't be worried about it as a DCAer. We can also look at MVRV, which is market cap over realized value being the last dollar amount value coins moved on chain. And you can think of this as unrealized profit. So if coins haven't moved on chain and market cap continues to rise, you will see MVRV increase. And if we line this up with historic all-time highs in price, towards the end of the cycle, eventually the unrealized profit, the MVRV Z-score, becomes so high that profit taking occurs, and it's just harder and harder and harder to continue to go up. So where we are now, we're about halfway through a level on the Z-score that would probably be considered overbought. Anything above 6, definitely use caution. 7, extreme caution. 8, extreme caution. So once again, all this is par for the course, normal in and around halving. We can see previous halving periods. MVRV may have been slightly lower, but not by much. And we may chop around here between 2 and 3, 2 and 3.5, something like that on MVRV, while the older holders sell to the newer ETF buyers or whatever, right? We will see potentially a lot of churn on the way up. And you can see where the realized value sits. The realized cap is considerably lower currently based on price. So I wouldn't say wait until we get back to the realized cap value. That doesn't typically happen until a bear market. And once again, this multiple is something that you can use similar to the 20-week moving average, whether or not to continue to DCA or not, right? 2 more quick things about the miners. Hash rate just continues to sit at all-time highs, screaming higher and higher and higher, month over month, week over week. One fun thing to watch is whether or not hash rate takes a tumble here with price and or halving. If price is coming down, block rewards are being reduced by half, how will that affect hash rate? The likelihood of hash rate coming off, I'd say, is pretty high if price continues to go lower, right? Sub 60. I don't think we go sub 50, but if we get anywhere near the low 50s, what does hash rate look like? We can also look at the Puel multiple, which basically measures how fat and happy are the miners this year relative to the previous 365 days. And you'll see post halving the Puel multiple will decline pretty significantly because of those block rewards declining. So the good news is the miners, the bigger ones, the industrial miners, certainly have plenty of dry powder in their treasury. But if they get concerned with hash rate, the network, whatever, and that BTC comes off or becomes unhedged or rehedged or whatever, right, that's where we'll see additional impacts on price. As far as where I get the data for all this stuff, bitcointreasuries.net is a great resource. I'll put all this in the description of the video. Farside.co.uk. It's where I get most of the ETF data each day. And then Tree of News, or News of Alpha, Tree News, their Twitter account, they post the BlackRock flows generally before everybody else. All right, let's talk about price here. The final minutes of this video. We have returned to the daily Kijun for the first time since the February breakout. There has been some concern from me and a few other people that we had started to lean increasingly bearish. This news in the Middle East certainly helps pull this lower. The good news is we're still above the daily cloud. Maybe the bad news from a trading perspective would be it will probably take several weeks for a similar type setup to emerge like February, which again, bullish TK cross is what we want, bullish TK recross. So this may take a week to cross bearish, a week to potentially recover, maybe 2 weeks to recover, and then we may see that bullish cross into May, even into June. Even though the cloud is bullish here and I have no issues with bids, I still have bids slightly lower, but I have no issues with any bids up here. The bigger issue is the rest of the structure that we've sort of violated. Several different types of triangles being violated to the downside in a bearish fashion. Equilateral triangle measuring to 52, essentially below the daily cloud. We are probably going to close below the daily Bollinger Bands, which were contracting pretty significantly. So this would suggest continuous bearish price action. And I guarantee you the legacy folks are going to call this out as a triple top or head and shoulders, specifically as Peter Brandt would call it, a King's Castle head and shoulders. It's a head and shoulders variant where the shoulders are higher than the head of the pattern. But in any event, this all measures to, we'll call it mid 50s, mid to high 50s. So there really isn't any bullish evidence. Here's an example on the DXY of this head and shoulders variation from late last year. So what we probably see is continued bullishness in the DXY, continued jump in the VIX on Monday, continued risk off sentiment in legacy. That's probably enough to continue to just have a headwind and bearish momentum on Bitcoin. We've also got dominance finally jumping to near 57. The measured move on this consolidation pattern for dominance would be near 60%. Alts getting absolutely slaughtered. So the TLDR is, look, we've had a great move here on Bitcoin over the past 6 months. Certainly have a little bit to give back on the mean reversion side. We're continuing to get more ETFs potentially online globally. We've got halving coming up. And at the end of the day, none of this is out of the ordinary from a price perspective. So if you want additional downside protection, you can move to cash, you can move to whatever else. Doing nothing always an option. And keep in mind, most of the action, you're not going to miss this. That's my opinion. There's generally people who get this analysis paralysis, but you're not going to miss the post-halving move, right? Do nothing, do something, do a mix of both. But I think the least likely thing at this point in time is to just continue a left translated cycle path similar to 2012 rather than 2016. So we got time. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.